Hey, what's going on everyone? CryptoVatsik here with another TA video for you. If you enjoyed this content, I would really appreciate it if you smash that like button. Okay guys, today I'm going to cover RSR, and this will be an update from my previous video where I talked about this macro resistance that sits up here in red, and honestly I think it shows a bit better on the monthly. That's where I kind of got that zone. Okay, so it sits right here in this kind of liquidity zone from this shelf here, from all these liquidity grabs here, and then once it was lost from this resistance here. Clearly that area that's well established. So I do think price will eventually stab that, but in reality the first attempt at it might look something like this, where we wick and then end up still closing underneath for some more consolidation. But time will tell. Let's not get ahead of ourselves. All in all, not a bad looking chart. Okay, go back to the weekly. So I'm not going to get into too much of this prior price history since I covered it in my last video, but you'll just notice right off the bat that we're really coming down off of this nice accumulation phase. We had this slow three push down sell off here in the bear market, which led to our bottom here in the yellow of our first initial accumulation. And then we got our first impulsive leg up. And what this has done now is potentially trapped a lot of traders and potentially trapped a lot of new investors. You know, really that broke our macro market structure, right? That this leg broke out of that bear market, breaking this lower high after these prior lower highs and getting now what is really our first correction and higher low out of that accumulation, which a lot of people who might have bought on the way up here are clearly trapped, and they started to sweat seeing price drop and then maybe even capitulated somewhere down here. So that's why it's a tough market. But what I'm seeing, and it's going to be the theme of this video, is still an accumulation phase, and I will get into why I think that is in 1 second. So we had our initial accumulation down here in yellow. We broke our last lower high off these lower highs, confirming the bottom is in, and that is denoted in the green box here. Okay, macro MS break. We put in a massive short squeeze here on this leg up into some high time frame resistance from over here, maybe even just off of this low. You can see we wicked up to it and got pretty harshly rejected, and then we ended up actually coming down and retesting that market structure break in green here, right? You can see we just came down and essentially retested that breakout. I mean, even though this is a massive correction, I mean, you can almost think of it as like an SR flip or just simple breakout and retest, right? If you have an SR flip with some resistance, something like this, and you break it, then you're just ultimately getting that retest of that flipped resistance level. But since this is kind of coming out of the bear market, which is a decline, you're kind of getting these lower highs after lower highs until it flattens out. You get your accumulation, and then ultimately you get that breakout and then that retest right here of that prior resistance of that accumulation phase. So that's where I think this is right here. And ultimately it's making a higher low. Okay, so we put in a high and now we put in a higher low. You'd expect a higher high and then a higher low. That's in theory, right? So if you believe that we have broken out of the bear market, such as I do, then you can expect something like that or predict something like that. But I think the problem is there was a bunch of trapped traders getting excited on the way up here, which is really unfortunate to see, especially if they started to capitulate down here just for price to basically V-shape reverse up and potentially never see those prices again for some time. But I did talk about this in my prior video. Okay, I talked about all the bearish divergences I was getting or I was seeing right with these wicks. Okay, when we look at RSI was making lower highs such as this, whereas price was making higher highs such as that. Okay, and that's clearly what we were seeing, and you can see it with all these wicks here. Lots of sell pressure. They didn't look like very solid healthy candles. They looked like they were struggling each time. So you can see that anyways and the result of it. But if you missed it and you want to see it, go back and check that video. But let's get to what I want to focus on, and we'll drop down to the daily for this. And you've all probably seen it before, is the Wyckoff Accumulation. Okay, this theory has been around for a long time. It's nothing new and you've probably seen it. However, you might be surprised to hear that I think this is what we're seeing currently, or a form of it, meaning that I think this is a form of reaccumulation that we're seeing in this price action, this correction basically off of our initial accumulation, right? We always hear about accumulation and then reaccumulation, and it can look many different ways. And given the fact that the crypto market doesn't necessarily trade like the traditional market, it may not look exactly like this, but the fundamentals are still there in my opinion. And so let's get into it. So first off, we're pretty fresh right out of our initial accumulation. Okay, relatively speaking, we've just broken out of it and had a retest of that. A very minor opportunity to buy into that retest. Great opportunity in my opinion. Okay, so relatively speaking, we're fresh off of our initial accumulation. So it's very normal and realistic to think we are seeing a form of reaccumulation now. And price does typically fall quite fast off of a short squeeze, okay, which is essentially this first leg here out of the bear market. This is only natural, right? This is essentially people just dumping their bags, taking the opportunity to make a bit of money, or potentially people that were still stuck from higher up way back here that just unloading their bags at the closest opportunity. But my point is that this correction here is not actually that nasty. This is pretty typical to see something like this, okay? So it's not out of the ordinary. It's pretty much expected off of a short squeeze. And you'll see it does want to build some sort of support here, this shelf. Okay, it's really starting to taper out, bounce around, just essentially ranging, which is very much what the Wyckoff accumulation looks like. It is essentially a range. We essentially came down, we put in a major low off of this short squeeze high. Okay, we put in a low there. We chopped around a bit, put in a couple highs. Okay, so we'll even just take it from this high here. And then we ended up deviating above that high here, and then pretty quickly trading underneath that prior high again here once it was lost. So you'll already see that I'm starting to build out a range here, right? You can just imagine the range high, the range low, the EQ. But then what's interesting is we come down and we actually pierce this low from back here. We pierce it and make a new low. Okay, so let me just expand this here so that you can see it. We come down, we made a low, we make a high, we pierce the high, we trade back under, and then we pierce the low. Okay, we dance around a bit, maybe we come back up here again, something like that. But ultimately, we're looking for that spring and that recovery. And that spring is basically that last scoop of liquidity, stopping people out that had their stop losses below the prior low, thinking that was the bottom. Everyone scoops up their buys and price reverses. Okay, so let's take a look at price action again. We can see clearly where our spring is. Okay, it's right down here. Clearly a very nice spring there. Large wick, very clearly pierced our prior low. Tested our green market structure break zone from our prior accumulation, okay? Just one test, just one final confirmation to really retest it, and it was confirmed, and price essentially reversed and is now recovering, and making it very difficult to get back in with all these very shallow kind of corrections and not really a clear opportunity to jump on board unless you caught this higher low here. Okay, so to me, this is looking like a form of reaccumulation. You know, it may be a bit of a stretch to say Wyckoff accumulation, but I see the fundamentals being there. I think the criteria is met. It would be clearly invalidated if we kind of came back down and broke this low. Obviously, that's a clear invalidation. But what I want to see now is basically just this continued strength, making it really difficult, to be honest, for traders or investors to get involved because there's no clear dip or high time frame dip. If we do end up getting that dip, we retest this high or something, then that's your next best opportunity, in my opinion. Make sure you set your stops, trade safe. But something like this wouldn't surprise me. And then we start taking out these highs until ultimately we push in for a new macro higher high. But it really doesn't surprise me that we got this type of price action. I think these things just take longer than people think for them to play out. But anyways, time will tell. We'll see what happens, you guys. Trade safely as always. I hope you enjoyed this video and took something away from it. And if you did, please give it a thumbs up. And don't forget to subscribe to the channel. As always, nothing of what you just saw is considered financial advice, and they're just my opinions. And I hope to see you guys next time. Peace.